Welcome back. Joining me for a look at the equity scene is Wessel Joubert from Oyster Catcher Investments. Wessel, thanks so much for joining us this evening. Now, economic data top of mind this week. Yesterday, we saw US PPI data coming in as softer than expected. The same kind of rhetoric playing out with the CPI numbers, easing to 2.9% in July from 3% in June. Wessel, is it safe to say that Fed rate cuts are on the horizon?
Oh, well, thank you very much for having me. It does seem like it. So what we saw in the PPI data yesterday, you saw the market rallying quite strongly as the data came in below expectations, and we saw a similar trend today in the CPI data. What we did see, however, the breakdown of the CPI data, there were some areas where inflation was still very, very strong. The one being transport and the other one rent. Now, rent is a little bit stickier, and transportation usually filters into a lot of other areas. As you can imagine, if you're a retailer and you have to pay up for transport for the goods to your shop, you generally put up the prices in time. You do absorb that in the short term, but over the long term, you have to put it up. So those two put a little bit of a damper on the headline number, but in general, it does seem as though the US market is slowing down a little bit, economic-wise, and inflation is coming down. So it does warrant, or more likely warrant, a decrease in the rates from the Fed.
You know, Wessel, we can only cross our fingers and our toes that it really does come through in September, so we can start seeing it filter through into our economy. Now, let's change gears to some company news out today. Let's start off with Tencent. The gaming division has recovered, boosting overall profits. Would you say this was expected, considering that China did kind of loosen restrictions within, that gaming industry?
So there are a couple of different things within that gaming sector. Their value-added services, which consists of international gaming, domestic gaming, and social networks. Within the international gaming sector, the growth was slightly weaker than expected by the market, but the domestic games made up for that weakness. Now, on the domestic front, they did launch Dragon and Fighter Mobile, which is they call it a AAA game. It's a highly anticipated game. It takes years to develop. And Dungeon and Fighter before this was a PC game. It had a 16-year following, so a lot of interest from a lot of people who used to be very young when they played it. They now obviously have quite a bit of money, or hopefully young working people, and they have a little bit more money to spend on the game. So on that front, they beat expectations. International gaming, a little bit softer than I think the market expected, but not too much. Still well ahead of what the market is growing at. So they're taking market share on the international front as well. So overall, from the gaming division, we thought it was actually quite positive.
So nostalgia really the name of the game here. We are seeing with that gaming division, those nostalgic games really kind of, beefing up the portfolio. And we've seen that also play out with the likes of Disney, when they upload their more nostalgic films onto these streaming services. Let's move over to the mining sector now. Lower PGM prices really eating into miners' profits. We had Northern Platinum warning of a plunge in earnings of up to 86%. Your thoughts on that update?
Yeah, so a little bit earlier, Northern did put out a production update. The production was slightly ahead of what the market expected, at least, or also what we expected. Then when the results came out, it seems like they sold a little bit less. So you have a little bit of inventory stuck in working capital, and then which means earnings missed slightly relative to expectations. Now, the big plunge in earnings was caused by the decrease in the basket price, and the majority of that was driven by rhodium. You have to remember last year, this time, rhodium was trading at about $8,000 an ounce. It's currently sitting at $4,000 an ounce. And for the mines, they're obviously very leveraged to the commodity prices. So the decrease in earnings, I say, was expected. Just a little bit less, I think, than what the market expected, just due to that selling a little bit less than what the market hoped.
So while we see the PGM miners taking a beating, we're seeing the gold miners benefiting from that higher gold price. DRD Gold, one of those miners, expecting profits to rise, but production has slipped. Talk to us about the dynamics that are playing out there.
Yeah, so DRD, as an example, is almost exactly the opposite, in the opposite scenario than what a Northam is. Their production you can afford to let it go a little bit when prices go up. So you often see that in mines. This wasn't necessarily the case, but often what happens in the mining space, when the commodity prices are high, the mines can afford to miss a little bit on their production numbers. So when they have lower grade areas that they can mine, they'll mine lower grade areas when the prices are slightly higher. But DRD should actually have quite a good set of results. The results were roughly in line with what the market expected, but they should, if the rand doesn't strengthen too much, DRD is actually in a good space to make quite a bit of money.
Wessel, before I let you go, just take us through your stock pick for today.
Yeah, so we prefer process at these levels. When you strip out a process specifically for the 10-cent holding, within that, we do think there will be some discount closure between process and 10-cent, but the 10-cent results were very, very strong in our opinion. We do think that they can continue to grow their revenue at high single digits. They will have margin expansion, at least for the next, we think, 2 to 3 years, after which it will still happen, but at a reduced pace of what it's been happening at. And then they've got a net cash position. When you add up their cash and their investments, they've got about 30% of their market cap in that. So when you strip that out, you're buying 10-cent through process on about 11, just above 11 times forward PE, which we think is very, very cheap for a very high quality company. The one caveat to that is we don't think the share price really rallies until China becomes investable from a, call it, global perspective. In South Africa, we're not too concerned about it, but in Europe and the US, the market is quite concerned on China.
All right, process one to watch. Wessel, thanks so much for your time and just taking us through the day's markets action. That was Wessel Joubert from Oyster Catcher Investments.